Hey everyone, Rachel Berg, realtor with Bridgewell Real Estate Group here in Coquitlam, British Columbia, Canada. And today I'm back for video number 2 with my favorite mortgage broker, Jon Chan from RBC. Today we're going to be kind of venturing a little bit more into how people that are looking to buy right now or that have existing deals already in the works can respond to all these issues related to COVID-19. Whereas the last video that we did was more about mortgage deferrals, where Jon was kind of guiding everybody through that. So if you haven't checked that out already, I will definitely leave a link in the description below. But yeah, Jon, take the time to introduce yourself.
Yeah, thank you again, Jon from the Royal Bank, helping under normal circumstances, of course, helping clients achieve their financial goals through home financing. Right now, more so with that and the added advice to get through COVID comfortably and put yourselves in a successful position going out of COVID, whether that be restructuring plans, and we'll talk a little bit about that, and taking advantage of the lower interest rates right now.
Yeah, that's an awesome point.
Mm-hmm.
I guess like really just starting things out is like, have you seen a big change in the amount of new deals that you're processing right now? Are you seeing sales decrease? What's happening for you?
Yeah, well, specifically to purchase deals, those have gone down a little bit. It makes sense. There are less people looking to get into the market just because they're kind of in a holding pattern. Also, perhaps a little hesitant to go look at new properties. Saying that, it has been tempered a little bit with some of my clients buying into pre-sales. Those are still happening with the presentation centers, with a lot of virtual tours, and a lot of existing home sales. I see those realtors going that route as well, doing virtual tours. So maybe that we'll see a lift a little bit soon enough. When it comes to just general mortgage advice, still seeing quite a number of people asking for just advice, especially with a lot of uncertainty. So kept quite busy right now, and we're certainly happy to talk to our clients rather than them not approaching us or whatever. So we want to make sure that people are taken care of throughout all this.
Yeah, that's awesome. And no, that's a good point. Is like, even though transactions may have gone down, it's not like the amount of calls that you're getting or how busy you are has. You're probably getting more calls and you're probably more busy. So that's good that people are reaching out. I know that in my office, I was talking to my managing broker today, and he was like, we have one of the busiest offices in all of the Lower Mainland, and he was saying that transactions overall are down about 80%. On the conveyancing side of things. And it's interesting because the March stats just came back and prices were still really, really good for all of March, taking everything into consideration. But I think we're going to see a little bit of lag of that. So it'll be interesting when the April stats come in early May. But moving on to what you're seeing in the market right now. So overall, would you say that it's harder to get financing? Do you think that, looking at the horizon, is it going to get harder to get financing for new buyers entering in?
I wouldn't exactly say harder, maybe taking a little bit longer to gather necessary documents, whether you need to contact your HR department for any letter of employment, whatever pay slips you can gather. I mean, some people are still working from home office, but maybe having a little bit of restrictive access to getting the stuff that you're used to getting. That in itself might lead to some revised expectations with subject removals, any reviews of the application, because we're just waiting for documentation. Right. For those that are maybe in a situation where you may be temporarily laid off, that might change things a little bit as well. But at the end of the day, it hasn't changed too much in terms, like the rules themselves haven't changed at all. We just want to make sure that we're putting our clients in a good financial position going forward, with looking at the long term, but also understanding the short term effects of COVID. If you're, again, having a cash flow situation right now, but expecting things to go back to normal very soon, we'll certainly balance out the short and long term aspects there.
Yeah, and I guess everything's on a case-by-case basis right now. So that's Absolutely. Good that you're taking things into consideration. So interest rates are obviously a hot topic right now, and them being so low, some people do feel like it's a good time to buy. So do you have any comments regarding the interest rate in general?
Yeah, interest rates are frankly an all-time low. Never seen them this low for the variable rates, the fixed rates, pretty much across the board. It's certainly something that can help nudge some people off the fence if they were considering, hey, I'm just going to wait. I'm going to wait because rates might go lower,
Mm-hmm.
or what have you. I know that, again, there are some hesitation in looking at new properties. But again, with so many innovative options, again, with virtual tours and are very, very, I guess, high-tech individuals out there to take advantage of these tools, there are a lot of opportunities to benefit. But again, saying all that, we want to make sure that we do look beyond just maybe this interest rate term and beyond. Is it the right thing for our clients to do? Because again, interest rate is very important, but it is only good for, say, a 2, 3, 4, 5-year term. We want to make sure that going beyond that, you're still setting yourself up for success.
Mm-hmm. Cool. And then kind of getting into like new deals, existing deals a little bit more, and the process. So subject removals are a hot topic right now. And if you're, having to take a look at things a little bit harder, maybe it takes a little bit longer to get in touch with the HR department for people that are still working. Are you saying that the process for subject removals is taking a little bit longer? What do you think?
It's a tidge longer than used to. Again, we like to advise our clients to get financial prepared well in advance of looking at a property. So doing your pre-approvals and all that. But getting into an actual live deal and having that subject removal, which is probably typically 7 days, we're suggesting clients maybe to bump it out to 10 days or so, just give a little bit of breathing room. Because again, maybe you need to reach out to your HR department to get a revised letter, and under normal circumstances that might be pretty easy, but because everybody's working from home, a little trickier, as well as maybe needing to coordinate with an appraiser or an inspection one way or another.
Mm-hmm.
And so with all these moving parts, having a little bit of extra breathing room, which let's just be honest, is quite reasonable given what's happening right now. We are suggesting a little bit longer in our subject removal period.
I think that a lot of like homeowners are very understanding of the situation as well. And that, yes, I think that most of us can say that, the unwritten standard is about 7 days, but I've seen a lot of homeowners accepting 10 days. I've even seen one just recently, 14 days. So yeah, that's good. And then you mentioned about appraisals. So a lot of the times appraisals are in person. So how is RBC dealing with appraisals right now? Have they switched to online, or what's your policy?
Yeah, we've been very fortunate to work with a lot of inspectors and appraisers doing online, digital appraisals, looking at comparable sales, and basically avoiding, or at least at the very least minimizing the need to be inside a particular unit or detached home. I mean, those are the traditional full appraisal methods. At most, I've seen what they call drive-by appraisals, where the appraiser will literally drive by the subject property, maybe stamp a few photos from the outside, and again, understanding the physical distancing requirements, keeping everybody safe, and understanding, hey, this is just the way we have to do business right now. We can't just suddenly say, hey, we can't do any appraisals, so we can't move forward. We have to evolve a little bit and have some flexibility. So very excited that RBC is looking at accepting those and accommodating our clients that need an appraisal. And we got one done, again, with online and a less physical approach.
Awesome. And just kind of breaking it down for people too, maybe they don't know what an appraisal is or what an appraisal is for. Yeah. Can you explain like what an appraisal is? Because I know sometimes my clients, they're like, what's the difference between an appraisal and inspection? Two very different things. An inspection is when an inspector comes in to inspect.
Yeah, no, for sure. It's funny you say that, because again, a lot of clients use that term appraisal and inspection very interchangeable.
Yeah.
They are quite different. So speaking briefly on an inspection, they look for potential deficiencies and quantify how much those deficiencies may be to remediate, to fix. So some of that might be quote unquote creature comforts or cosmetic or material items, where an appraisal, on the other hand, looks at the value of the property.
Mhm.
And our mortgage financing is based on what it's worth, not necessarily what you pay for. Hopefully there's not a huge disconnect between what it's worth and what you're paying for. But again, we're looking at how much it's worth and doing our calculations based on that. So an appraisal is, again, necessary. Just given the market right now, I mean, I remember a few years back where the people were frankly paying well above market value to secure a property. But when they come back with doing an appraisal, we find that it's worth less than what they paid for. And we can only, again, finance of the lesser of the two, which, again, you don't necessarily want to pay that far off from what it's actually worth. But that's what was happening, I want to say, about 4 or 5 years ago. And that, again, frankly, can be an issue when you're thinking it's worth something, but and you're paying it, and it's actually worth a little less, and the banks can only finance accordingly.
So in a situation, like, you're totally right, like 2016, things
Mhm.
were crazy hot, people were overpaying for properties. And yeah, for most people that have good realtors, we're doing comparative market analysis. We're making sure that you don't overpay for that property, but still taking market conditions into consideration. But let's say that somebody, did overpay for a property and they had an appraisal come in lower than what their agreed upon price was. How does the bank see that? What happens in that situation?
Yeah, again, unfortunately, that does sometimes happen, and hopefully the gap isn't overly significant. What we would try our best to is finance the maximum amount based on the value that came back in the appraisal. And we'll be honest too, sometimes we try to challenge the appraisal as well, just to see if the particular professional was being a little too conservative, which happens.
Hmm.
But say we get the result back and we have to work with that, we would try to maximize what we can borrow based on that appraised value. And the difference, frankly, may have to be a larger down payment just to close that gap. So I think that's something we have to be very cautious about, whether it be resale or a pre-sale properties, where you paid a certain amount and but the value is a little less. So that's just more of a consumer, I guess, awareness. Again, I mean, it's a simple thing that you don't want to overpay for something
Yeah.
significantly. Getting caught up in the hype of saying, I really need this, I really want this, and paying 10-20% more than it's actually worth. And that's when you can get yourself in trouble.
So then I guess, well, at least one of the questions that I've been receiving for a lot of pre-sales specifically that have, completion dates that are maybe a year or even 2 years out, right?
Mhm.
Is, okay, I paid this much money today and I know I didn't overpay today, but if the market drops 5, 10, 15, whatever percent, nobody knows, then how am I going to be affected if I'm appraised closer to completion? Or like, how does that work for a pre-sale?
Yeah, that's actually a perfect example, because it is a couple of years out from when you bought it, and anything can happen based on market fluctuations. And you're right, we've seen people that bought pre-sales, say 2.5 years ago, and they're probably coming up for a ready completion now,
Mhm.
and they may have dropped in value because the markets were really hot when they bought the place, but has cooled down since. And that's when you can run into the problem where we can only finance the lesser of the two. Um, the workaround, which is a little tricky to say, but frankly, if we can get ahead of the problem and get financing done well in advance, then we wouldn't have to worry about that. RBC has special programs to evaluate the property at time of contract, looking at our client's financial situation, income and credit, as well as the value of the property early on,
Mhm.
and give what we call a firm approval. At that point, we don't have to worry about the anything changing by the time things complete, say 2-3 years from now, whether maybe the valuations have come down or change of job situation, credit situation, we're solid. RBC has the firm approval, kind of stamp of approval that I like to say that we won't go back on if, again, assuming the clients had shown everything in full disclosure and truthful at the beginning, and everything looks great, then we like to clear out all the questions then and there, so there's less things to worry about later on.
Mm-hmm. Yeah, no, that's great. And I know that like when I bought my investment property, it was a pre-sale and I used RBC, and you know, it was probably about 12 or just over a year out. And there was a blanket appraisal on the property. We got a firm approval and it was a no look back. So we didn't have any issues. And I know that some brokers, for example, just so you guys know, a lot of the times, you know, they can only really start working on your pre-sale file maybe 4 months prior. But like Jon said, one of the great things about RBC is like you guys are trying to get that ball rolling sooner rather than later, so that we don't have problems with appraisals and we don't have problems with financing
Absolutely.
for pre-sales. So that's great. So yeah, I mean, moving on, like subject removal process, appraisals happen, you try and get firm approvals. We talked about all that, but one of the new exciting things that was announced just recently in terms of completions is that Land Titles is now accepting remote signings. So that makes it a little bit easier for a lot of these lawyers that are dealing, you know, with foreign buyers that can't fly internationally right now, so they can't sign, you know, wet ink. Now they're accepting video signings for lawyers, but I have been talking to some lawyers and they said that, you know, even though they can do video signings, a lot of the lenders haven't really adopted this policy, and some of them require wet ink still. So do you know what RBC is doing right now with regards to video signings for completions?
Yeah, we've looked at or started doing video signings as well through a lot of our notary and lawyer partners.
Awesome.
Also in terms of refinance plans where we use our partners at First Canadian Title, they've started doing video signing as well. So I'm very excited to see all these new innovative methods to help our clients right now, where again, physical distancing is very, very important. But maybe even looking ahead, we have all these technologies that are coming out of COVID that can benefit our clients for convenience or for whatever purpose down the road. So just to say, it's great to see that the bank that I work for is totally on board with the video signings. We've also come up with a slew of technology, including e-signing and of course web conferencing, to continue helping our clients. So stemming from just general technology, yes, RBC is embracing all of this to help out our clients so that we can keep helping out where possible, rather than saying, sorry, you have to come on in and meet in person and have wet ink. Some people are hesitant to do that. So we want to have the flexibility to continue helping our clients where we can.
Cool. Well, yeah, I know that was a really big news that came out this week. So it's great that there's some options for getting around completions with video signings if necessary. Kind of moving on, I mean, do you have any financing tips right now, mortgage tips, additional programs that are in support? Like, what are your recommendations for people right now?
Yeah, I always tell my clients, I mean, under normal circumstances, let's start with that first. It's always good to look at one's mortgage financing. Whether you're coming up for renewal or say you're in the middle of the term, it doesn't hurt to take a look at what's happening out in the world compared to what you have, and talk to your advisor to say, hey, is it worth changing things up? Whether you're want to blend in a car loan or consumer loan into your mortgage to pay lower rates, or hey, maybe I see interest rates right now are like 1% or more less than what I'm paying right now. Is it worth breaking my term, paying a penalty, and going into that? We're seeing lots of opportunity, even right now with COVID, to say, hey, with interest rates being so low, is it worth doing something now with a net savings? So what I mean by that is the interest rate is low enough to save money, and even still the case when you factor in like a potential penalty. So net savings, great. I've even seen situations where the client was actually breaking even or paying a slight premium to do this. And I'm not logically be like, why would I do that? Well, that's because they're protecting themselves now by saying, hey, my mortgage is normally going to be due in 2 years. Doing all of this, I can lock in my mortgage for 5 years now. So I'm basically hedging my bets. Not only have to worry about what the rates will look like 2 years from now, I'm good for another 3 beyond that.
Mm-hmm.
So there's a lot of different things to look at when it comes to your mortgage financing now, taking advantage of the low interest rates, and maybe restructuring things. Take the opportunity to restructure things right now. I know kind of the world's somewhat hit pause on everything, so that does give you kind of the excuse to look at your situation, clean things up where you can, and let's call it the spring cleaning of your financials. And to talk to myself, one of our advisors at RBC, happy to help out where we can. And if it makes sense to do something now, great. If it's you rather wait till later, absolutely. But at least you've asked that question. At least we can say, hey, we all know hindsight is 20/20, but you don't know what you don't know. Right? Yeah. Let's just ask those questions. If it's worth doing something now, great. If not, we have patience.
Yeah, no, those are all really great points. And, I think a lot of the dialogue right now is talking about, new buyers entering the market and beware, or, existing like buyers with deals, what should we do kind of thing. But you're right. Like there is a lot of opportunity for people that just have existing mortgages to maybe, financially plan for the long run, or maybe they'll actually have savings if they break their mortgage. So that's a really, really good point. And like for all you guys too that do have existing mortgages, like, pick up the phone. Like Jon said, it's no harm, no foul. If you ask him and it doesn't end up being beneficial for you, then at least But like you said, Jon, like you don't know what you don't know, and it could be beneficial. So, we're here to help, and we just want to be your resource for anything real estate, anything mortgage related. So pick up the phone and give us a call. Again, Mariko Berg, realtor with Bridgeville Real Estate Group. If you have real estate questions, or you have some recommendations for what you want us to talk about on our next vlog, then definitely let me know. And Jon, again, he's an awesome mortgage broker, so reach out to him if you have any mortgage questions, whether you're a new buyer, whether you're an existing buyer, or whether you're an existing homeowner with a mortgage that you have questions about. But yeah, I think we covered a good range of stuff today, and our next vlog series, what we had planned was talking a little bit more specifically about pre-sales, so everybody stay tuned for that one. Again, if you haven't seen our last video, it was all on mortgage deferrals, so take a look at that one too, and we will see you guys next time. Thanks so much for being here, Jon.
Thanks again.